You're able to see the screen?
Yes, sir.
The software company enters into a contract of $250,000 with the customer to transfer a software license, perform installation service, and provide technical support for a 3-year period. So there are 3 performance obligations. One is the transfer of software license, second is performing the installation, and third is to provide the technical support for 3 years. The entity sells the license installation service separately at 1,60,000 and 20,000 respectively, and $30,000 per year for technical support. Show the allocation of the price on the journal entry for year 1. So let us do this. Right now. There are 3 performance obligations. In this contract. Number 1, software license. Number 2, installation. And number 3, technical support. Fair value of the contract for the license, software license. It is 1,60,000. These are the standalone prices that we have to take. Second is installation. What is the standalone price for installation? What is the amount?
Sir, 20,000.
20,000. And how much for technical support?
Sir, 30,000. 30,000 per year.
30,000 per year for 3 years, 90,000. $2,70,000. Allocation of transaction price. Is going to be in the ratio now. what will be the ratio for license? It will be 1,60,000 divided by 2,70,000 into the total contract price of 2,50,000. See how much it is? How much are you getting?
So 148, 148.
148, 148. Okay. Installation. $20,000 upon 2,70,000 into 2,50,000. How much?
Sir, 18519.
18519. And technical support. 90,000 upon 2,70,000 into 2,50,000.
So 83
3,000
triple three.
people. This should total to 2,50,000. Now, journal entry for the first year. On entering the contract, debit cash, 2,50,000. Credit license revenue, 148, 148. Credit installation revenue, 15,519. Credit unearned revenue, because this is for 3 years. 3 years we have to show it. Spread each year 1/3 we have to show. So as on the date of entering into the contract, it is unearned revenue. 83,330. at the end of the year, 1/3 of that we will have to show as revenue. So debit unearned revenue. And credit service revenue. With 1/3 of 83,333. Calculate how much? How much are you getting? 27,000.
27,777.67.
Can take it as 27,778. Done. Question number 2. Western company builds a manufacturing equipment to custom requirements. Ola company enters into a contract to build a large manufacturing equipment for 1,50,000. Ola company agrees to pay additional manufacturing bonus if it is delivered early. Otherwise, equipment is to be delivered by 30th June. If the equipment is delivered by 10th of June, then bonus will be 10,000. Delivered by 15th of June, then bonus will be 7,000. And if delivered by 20th of June, the bonus will be 5,000. Now, this is a question on what? Which part of the revenue we see? It is variable consideration. Yesterday we were talking about variable consideration. Probabilities for the above deliveries are given 60%, 20%, 10%, and a 10% that it will be delivered on June 30th. Calculate the transaction price. So write down. It is a case of variable consideration. Calculation of transaction price. It is done on 10th of June, then bonus is 10,000. So total amount payable is 1,50,000 plus 10,000. But the chances of this is 60%. Multiply by 60%. So 1,60,000 into 60%.
96.
96,000. It is done by 15th of June. ₹1,50,000 plus 7,000. The probability of this is 20%. So 157 into 20.
31,400. 31,400.
31,400. Okay. If it is on 20th of June, it is 150 plus 5. It's 155. And this is 10%. 155, 10% is 15,500. 30th of June. No bonus. 10%. 15,000. Take the total. $157,900. That is your transaction price.
Sir,
Yeah.
I had one doubt. The company is paying us 150,000 for the manufacturing unit.
Hmm.
So like basically the transaction price is like what it is like 159.
No, transaction price, if it is straight away, it is given that the agreement says that we are going to pay 1,50,000. Then that is 1,50,000 single price. But then there are options given. Now, options given will materialize only when the delivery takes place. So before that, on the date of the contract, when the contract is entered into, 1,50,000 cannot be the transaction price because there are various possibilities of transactions being preponed. That means the delivery being preponed. So in that case, there are different amounts which are going to arise. So what is this 157,900? If you see, this part is your X value. This part is your P value. So this is summation of P into X. So this 157,900 is actually your average, or what we call as expected value. So the average price of the entire transaction is around 157,900. So as and how the time passes, we'll come to know that, okay, after 10th June passes, we know that this is not possible. Then after 15th June passes, we know that this is also not possible. Like that, ultimately it will come down to 1,50,000 if it is delivered on 30th June. Okay, but on the date the contract is entered into, it is 157,900. Question 3. On 1st Jan 2010, SDF sold a furniture to a customer for $4,000 with 3 years interest-free credit. Customer took delivery on the same date. The amount of $4,000 is payable on December 31st, 2012. Date of transaction 2010. This is December 31st, 2012. Applicable discount rate is 7%. Calculate the transaction price and make a small addition here, and the interest included. in each year. So try it out. Tell me what is the answer. As I told you yesterday, that 4,000 is paid now or 4,000 is paid after 3 years. They are saying you can pay only 4,000 after 3 years. But as I told you, in that case, the amount of interest is included in that 4,000. So you have to remove that interest amount and tell me what is the transaction price excluding the interest. Okay, so do it. Yes, Ojus.
Sir, first calculating transaction price, we'll need to get the present value. So it will be future value into 1 by 1 plus r to raised to power n. So it will come to 3265. The transaction price will be 3265. And then calculating the interest income each year for the consecutive 3 years will be for year one, it will be 3265. 3 to 6.7% will be 2 to 8.55. Then year two it will be 3 to 6.65 plus 2 to 8.55. Of that 7% will be 244.54. And the year three will be 3 to 6 plus 2 to 8.5 plus 244.54 into 7% will be 261.60.
Correct. Absolutely. The amount of $4,000 is payable after 3 years, which implies it includes interest at 7% per annum. Therefore, present value is equal to future value Mutual value is 4,000. 1 divided by 1.07 raised to 3. To 65. So transaction price is 3265. Now for the interest calculation. Two thousand ten ka interest is 3265 multiplied by 7%. So that comes to 229. 2011. 3265 plus 229 into 7%. Is 245 for 2012. 3265 plus 229 plus 245 into 7%. 262. So if you take this figure now, how to know whether it is correct or not? 3265, original figure, plus all the interest, 229 plus 245 plus 262 should give you 4,000. So approximately it comes to 4,000. Okay, let's take the last one. Question 4. Webster Incorporation sold and transferred control of equipment to BAT Company for $1 million and accepted a 5-year note with an interest rate of 5%, monthly installment of 18,871. Cost of equipment is $750,000. Find the transaction price and the interest for the year 2020 if the sale took place on 1st September 2020. Work it out and tell me the contract, the transaction price, and tell me the total amount of interest payable for the year 2020.
Sir, uh, in this question, is it like this, like the transaction took place on September 1st, no? So
Hmm.
only for 4 months will be accounted for the interest
Hmm.
because it is asked for transaction price and interest for the year 2020. So
Yeah,
September, October, November, and December.
yes, interest will be calculated for 4 months.
Okay, sir.
So for the year 2020 means, so it was applicable from 1st September to 31st December.
Yes, sir.
Yes, Sujesh.
The answer for this is the transaction price will be 863,838, and the interest for year one as specified
Hmm.
will be it is 863,838 of that 5%. So yearly interest will be 41,842. If we do it by divide by 12 and then multiply by 4, it will come to 13,947.3.
No, it's not correct. Transaction price, how much you got?
863,838.
No, that is also not correct.
One more. Sir, the transaction price will be 783, 526.16.
That is also not correct. Yes, Krish, what is the transaction price?
So I am getting 528.
No. I don't know how you are getting different transaction price. Transaction price is given to you in the question. It is $1 million. Transaction price is $1 million.
Like how, sir?
They have said now that it has been sold and transferred. Transfer of control has taken place for $1 million. For that, a 5-year note has been accepted. That means you have taken actually a loan. You have taken a loan to make the payment of that $1 million. Okay. And what you are calculating is interest on the loan. It is not interest on the difference between the transaction price and the amount given to you. So I knew that you were going to discount it and calculate the present value. That is why purposely it was given. $1 million is the transaction price. It has got nothing to do with that 5% interest because that is a different transaction altogether. Accepted a 5-year note with an interest rate of 5% and monthly installments of 18,871. So that is for the loan. So a loan has been taken and you have paid the amount of $1 million. So that is your transaction price. As of now, you have made a payment of $1 million. That amount we have taken actually on loan basis and accepted a 5-year note. And you are asked to calculate the interest payable on that loan that you have taken. Okay, so let us write down. Transaction price is $1 million. Calculation of interest. Month outstanding at the beginning. Principal, interest, installment, outstanding at the end. Month of September, you had started the transaction. Outstanding amount was $1 million. Installment is 18,871. Calculate interest, which is at the rate of 5% on outstanding at the beginning. Outstanding at the beginning is $1 million. So how much will be the interest? 50,000. For 1 month, it will be 4167. 4167. You subtract from 18,871. So 14,704. Minus is 14,704 from 1 million. Outstanding at end 985,296. On just 5% for 1 month. 4105. Installment remains same. Minus it from minus 4105 from 18,871. 14,766. Subtract this amount from 9,85,296. $975.30. Into 5% for 1 month. 4044. Minus from 18,871. 14,827. 970,530. 955,703. Into 5% for 1 month. 3982. $16,298. Okay. So we'll continue on Monday. Tomorrow we'll take a break. Monday will continue. So Monday section A, we're having my lecture instead of Shailaja. Okay. So wherever Shailaja ma'am, even for section B, wherever Shailaja ma'am is there, next week I will be coming for the lecture.